Hello and welcome back to the channel. I want you to take a deep breath, inhale and exhale. Feels good, right? Now, I want you to look at the crypto charts. Not so good, right? We're seeing a sea of red, a storm of volatility, and a tidal wave of fear. It's enough to make even the most seasoned trader's stomach churn. In times like these, it's easy to panic, it's easy to make emotional decisions, and it's easy to get wrecked. But what if I told you that this is not a time for fear? What if I told you that this is a time for immense opportunity, a once-in-a-cycle chance to build life-changing wealth? In today's episode, I'm going to give you a four-part framework, a survival guide, if you will, for not just weathering this storm, but for sailing through it and coming out the other side stronger and richer than ever before. We're going to dissect why this is a spot trader's paradise and a leverage trader's nightmare. We'll uncover the secrets of the great accumulation and how you can use it to your advantage. We will then venture beyond the trading screen to explore the lucrative world of airdrops, yield farming, and liquidity pools. And finally, we will forge the unbreakable habit of ironclad risk management. So if you're tired of the FUD, if you're ready to silence the noise, and if you want a clear, actionable blueprint for your crypto journey, then you've come to the right place. Buckle up, because we're about to dive deep. Let's get it. Let's be brutally honest. The crypto market right now is a war zone. We're witnessing price swings that would make a roller coaster jealous, multi-$100 million liquidations in the blink of an eye, and an unprecedented level of institutional involvement that is rewriting the rules of the game. As I'm recording this on October 22nd, 2025, Bitcoin is hovering around the $108,000 mark. But that number doesn't even begin to tell the whole story. In the last 24 hours, we've seen a gut-wrenching $6,000 swing, from a low of $107,619 to a high of $113,804. That's a 6.5% move in a single day. And it's not just Bitcoin. The entire crypto market is on a knife's edge. In the last 24 hours, we've seen over $650 million in liquidations. That's not just a number. That's hundreds of thousands of traders, just like you and me, who have had their accounts wiped out. Now, I know the siren song of leverage is tempting. The idea of turning a small amount of capital into a fortune overnight is a powerful one. But I'm here to tell you that in this market, leverage is a trap. It's a one-way ticket to financial ruin. And here's why. The crypto market of 2025 is not the crypto market of 2017. It's not an isolated sandbox for tech geeks and cypherpunks anymore. It's a global financial behemoth, deeply interwoven with the fabric of the world economy. We have geopolitical tensions simmering across the globe, from the ongoing trade disputes between the US and China to the political instability in Eastern Europe. We have macroeconomic headwinds, with central banks around the world grappling with inflation and the specter of recession, and we have the elephants in the room, the institutional investors, BlackRock, Fidelity, Goldman Sachs. They're all here. And they're not playing around. They have armies of quants, supercomputers running sophisticated algorithms, and the kind of capital that can move mountains. When they make a move, they create waves. And if you're a small retail trader with a 100 times leverage position, you're going to get drowned. We saw this play out in spectacular fashion just a few weeks ago. Bitcoin was on a parabolic run, smashing through its all-time high and touching $126,080. The euphoria was palpable. "To the moon!" was the cry on every social media platform. And then the rug was pulled. In the span of a few hours, the market nosedived. We witnessed a $20 billion leverage wipeout, the largest in crypto history. Open interest in Bitcoin futures, a key measure of leverage in the market, plummeted from a peak of $94 billion to around $70 billion, a 27% haircut in a single day. And who was left holding the bag? The retail traders who had FOMO'd in at the top with their life savings on 100 times leverage. This is why I'm imploring you with every ounce of my experience to stay away from leverage in this market. This is a spot market. When you buy spot, you own the asset. You're not borrowing money. You're not at the mercy of liquidations. You can ride out the volatility. You can sleep soundly at night. And most importantly, you can position yourself to capitalize on what I believe is the greatest accumulation opportunity of our generation. I'm going to share a secret with you, a secret that the whales and the smart money don't want you to know. The real wealth in crypto is not made during the euphoric bull runs. It's made during the dark, desolate bear markets. It's forged in the fires of fear, uncertainty, and doubt. It's when the streets are running with the blood of over-leveraged traders that the foundations of fortunes are laid. This is the time to accumulate. This is the time to be greedy when others are fearful. As of today, the Crypto Fear and Greed Index, a key sentiment indicator, is flashing a reading of 24. That's not just fear, that's extreme fear. This is a contrarian indicator of the highest order. It's a screaming buy signal. And if you look beneath the surface at the on-chain data, you'll see that the smart money is doing exactly that. The amount of Bitcoin held on exchanges is at a multi-year low. This means that long-term holders, the so-called diamond hands, are not selling. They're taking their coins off exchanges and moving them into cold storage. They're accumulating. They're preparing for the next bull run. So how can you join them? How can you become an accumulator? The first and most crucial step is to have dry powder. This is your war chest, your secret weapon. It's cash or stable coins that you have sitting on the sidelines ready to be deployed at a moment's notice. I can't stress this enough. You should aim to have at least 30 to 50% of your crypto portfolio in dry powder. This will give you the psychological and financial firepower to buy the dips, to take advantage of flash crashes, and to turn market panic into personal profit. The second step is to embrace the unsexy but incredibly powerful strategy of dollar cost averaging, DCA. This is the antidote to emotional investing. It's a simple yet profound concept. You invest a fixed amount of money at regular intervals, say $100 every week or $500 every month, regardless of the price. When the price is low, your fixed investment buys you more crypto. When the price is high, it buys you less. Over time, this smooths out your average entry price and removes the guesswork and the anxiety from investing. It's a disciplined, systematic way to build a position in your favorite assets. I know it's counterintuitive. I know it's hard to click that buy button when the market is a sea of red. It goes against every primal instinct in our bodies. But I promise you, if you can cultivate the discipline to stick to your accumulation strategy, you will be richly rewarded. Every bear market in history has been followed by a bull market that has reached new all-time highs. The seeds of the next bull run are being sown right now in the fertile ground of this bear market. And it's up to you to plant them. And while spot trading and accumulation are the cornerstones of a solid crypto strategy in this market, they are not the only paths to prosperity. In fact, some of the most explosive, life-altering opportunities in crypto today lie beyond the trading screen. I'm talking about the world of airdrops, yield farming, and liquidity pools. These are the strategies that can turn a small investment into a fortune, and they are the strategies that you should be dedicating a significant portion of your time and attention to in this market. Let's start with the holy grail of free money, airdrops. An airdrop is a marketing stunt on steroids. It's when a new crypto project distributes its tokens for free to its early users and community members. It's a way to bootstrap a community, to decentralize a network, and to reward those who believed in the project from the very beginning. And some of these airdrops have been nothing short of legendary. We've seen airdrops that have been worth tens of thousands, and in some cases even hundreds of thousands of dollars. It's like getting a winning lottery ticket that you didn't even know you had. And the best part is, the airdrop season is far from over. In fact, it's just getting started. We have a whole constellation of massive airdrops on the horizon. MetaMask, the undisputed king of crypto wallets with millions of users, has confirmed that a token is coming. Base, the new layer 2 solution from the crypto giant Coinbase, is also exploring a token launch. And that's just the tip of the iceberg. We have a whole new generation of perpetual DEXs like Asta, NFT marketplaces like OpenSea, and interoperability protocols like Layer 0 that are all but guaranteed to airdrop tokens to their users. So, how do you position yourself for these airdrops? It's simple. You become a user, an active, engaged, and loyal user. For MetaMask, that means using their swap and bridge features. For Base, it means exploring the dApps that are being built on their network. For Asta, it means trading on their platform. The more you interact with these protocols, the more you contribute to their ecosystems, the higher your chances of receiving a handsome airdrop. Now, let's talk about the art of making your crypto work for you. Yield farming and liquidity pools. These are the strategies that allow you to earn a passive income on your crypto holdings. With yield farming, you're essentially becoming a bank. You're lending your crypto to a DeFi protocol, and in return, you're earning interest. With liquidity pools, you're becoming a market maker. You're providing liquidity to a decentralized exchange, and you're earning a share of the trading fees. These strategies can be incredibly lucrative, with some platforms offering APYs that would make a traditional banker's eyes water. We're talking double-digit, and in some cases, even triple-digit returns. But with great reward comes great risk. The biggest boogeyman in the world of DeFi is impermanent loss. This is a complex topic, but in simple terms, it's the risk that the value of your deposited assets will be less than if you had just held them in your wallet. There's also the ever-present risk of smart contract bugs, hacks, and rug pulls. This is why it's absolutely crucial to do your own research, to understand the risks involved, and to only invest in reputable and audited protocols. I recommend starting with the blue chips of DeFi, Uniswap, Curve, and Aave. And I also recommend starting with stablecoin pairs, as they have a much lower risk of impermanent loss. If you can master these long-term investment strategies, you will be building a truly diversified and resilient crypto portfolio. You'll be earning a passive income, you'll be getting in on the ground floor of the next big thing, and you'll be setting yourself up for exponential growth in the next bull run. I'm going to be honest with you, this is the part of the video that most people will skip. It's not glamorous, it's not exciting, it's not going to get you a million views on TikTok. But I am here to tell you that this is the most important part of the video. This is the part that will determine whether you're still in this game a year from now, or whether you're another casualty of the crypto casino. I'm talking about risk management. Risk management is the bedrock of successful trading. It's the invisible shield that protects you from the slings and arrows of a volatile market. It's the discipline that separates the professionals from the amateurs. It's the habit that will keep you solvent, sane, and successful in the long run. So, what is risk management in practice? It's a set of non-negotiable rules that you live by. It's a system for protecting your capital at all costs. It's about knowing your exit before you even enter. It's about being a warrior, not a gambler. Here are the commandments of risk management. Commandments that you should write down, memorize, and never, ever break. First, position sizing is king. This is the golden rule. You shall not risk more than 1 to 2% of your total trading capital on any single trade. If you have a $10,000 account, your maximum risk per trade is $100 to $200. This is not a suggestion, this is a law. It's what will allow you to survive a string of losses without blowing up your account. Second, the risk to reward ratio is your compass. You shall not enter a trade without first calculating your potential profit and your potential loss. You shall only take trades that offer a risk to reward ratio of at least 1 to 2. This means that for every dollar you risk, you stand to make at least $2. This is what will make you profitable in the long run, even if you're only right half the time. Third, the stop loss is your savior. You shall always use a stop loss. A stop loss is a preset order that automatically closes your position when the price hits a certain level. It's your eject button, your parachute, your get out of jail free card. It's what will protect you from a black swan event, a flash crash, or a moment of your own insanity. There are no excuses. You use a stop loss every single time. Fourth, emotional discipline is your superpower. You shall not let your emotions dictate your trading decisions. You shall not FOMO into a trade because it's pumping. You shall not revenge trade after a loss. You shall not marry your bags. You shall be a robot, a machine, a cold, calculating, and disciplined trader who executes their plan with ruthless efficiency. I know these rules sound simple, almost insultingly so, but they are deceptively difficult to follow in the heat of the moment. It takes time, it takes practice, and it takes a level of self-awareness that most people lack. But if you can internalize these principles, if you can make risk management a habit, you will have an insurmountable edge over 99% of the traders in the market. You will be the house, not the gambler. You will be the one who survives, and ultimately, the one who thrives. We've covered a lot of ground today. We've stared into the abyss of this bear market, and we've emerged with a clear 4-part plan for not just survival, but for victory. Let's recap. First, this is a spot market. Leave the leverage to the gamblers and the institutions. Protect your capital, own your assets, and trade with a clear mind. Second, this is the great accumulation. Be the contrarian. Be the one who buys when others are selling. Have your dry powder ready and DCA into the projects that you believe in for the long term. Third, the future is beyond trading. Dive into the world of airdrops, yield farming, and liquidity pools. These are the asymmetric bets that can change your life. Fourth, risk management is not a choice, it's a necessity. Make it a habit, make it your religion. It's the one thing that will guarantee your longevity in this game. I know that the current market sentiment is bleak, but I want you to zoom out. I want you to see the bigger picture. We are at the dawn of a new financial era. The world is changing, and crypto is at the heart of that change. The people who have the courage to stay the course, the discipline to follow a plan, and the vision to see beyond the current volatility will be the ones who write the history of this new world. Thank you for joining me on this journey today. If you found this video valuable, do me a favor and smash that like button. Subscribe to the channel and ring that notification bell so you don't miss our future content. And I want to hear from you. What are your thoughts on the current market? What are your strategies for navigating this volatility? Drop a comment below. I read every single one, and I'm excited to continue this conversation with you. Until next time, trade smart, stay safe, and I'll see you in the next video.